and I consider it more of like a work of art. There will be things that I may see that others may not see, and vice versa. And there may be tools that I like to use because they were just what I like, and
Mm-hmm.
there are tools that other people use that I don't use because they like it. So you really have a bunch of tools out there to choose from, and you kind of go with what works for you. But all of that said, um, I did want to, just kind of find out. I know I see always Bull, Chris, Kron, Lust, Super Sin, Tinfoil, Usine. I don't know if anybody, is anybody, pretty experienced with TA or trading, or is everyone pretty much new? Anybody that wants to speak up about that?
Mike on.
Hey, this is Kron. I'm completely new to it. That's one of the reasons why I'm so interested in a class on this, because I couldn't make heads or tails out of those graphs to save my soul.
No, totally understand. And I'll go into I'll start sharing my screen, but I did want to share and some basic things that were new to me as well. Well, all of it was new. We all start from somewhere. But when you see on Twitter and stuff like that, people may call, this is the top or this is the bottom. Um, I'm not. That's not really the thing for me. And I don't really like to make habits of calling tops or bottoms. I don't think it's really good business for those that try and make profits out of this type of stuff. But really, what you learn through the experience of TA is knowing what levels there might be support or resistance, and where to look at those levels as possible magnets for price to get to. And then you're constantly assessing the market structure to kind of see which way you think it might go. But the ultimate idea is you learn how to read candlesticks and trend lines and support and resistance, and you can get into Fibonacci's and a bunch of other types of tools. But it's really the point is to give you an edge, and that edge, typically a lot of the seasoned traders are that are successful. They're probably around 60% success rate on their trades. And some people might think, okay, well, that's a little bit more than half of their trades they're successful on, and how do they actually become profitable on that? And a lot of that really comes down to things that most people overlook, which is having a trading plan is the one of the most important things before even knowing how any of this stuff works. Excuse me, is having a trading plan and basically knowing and understanding risk management. Excuse me for a second here. I just gotta drink some water.
By all means, pause as many times as you need to, John.
I appreciate it. I think the frog's still there, but whatever. We'll get through it. Um, so, a lot of the experienced traders, when they have a trading plan, and trust me, there's a reason why I'm bringing all this out. And again, I don't want to sound preachy and stuff like that, but it's really important to know these things, and especially with what's going on recently. Obviously, the last couple of days, what we've seen with the price action and in Bitcoin and ETH and crypto as a whole. There's the issues with FTX and their insolvency, things like that. I mean, right now I was looking at the total market cap, and last I checked, I want to say there was over 200 million, or was it no 200 billion? I'll have to double check, but 200 million or 200 billion that was lost. It looks just in the last day or two. And all those people, that are losing money, it's extremely heart wrenching. It's extremely difficult, and a lot of these people, are probably really good traders, and a lot of them were just it was just bad luck. You go back a little bit further to earlier this year, what happened with Solana, or I'm sorry, Luna, excuse me, Luna. And there was people that lost their entire life savings. And from personal experience, I know a lot of people that whose lives were completely affected forever from that, and more, and those in their lives. And so it's really important to understand your risk management, how to mitigate it, and really having a trading plan. And going back to the trading plan, a lot of these trades that people, experienced traders take, they actually know prior to taking the trade, they know where they're going to enter, and they know where they're going to put a stop loss, where to exit, where you say, okay, enough's enough if it hits this level, and they may have multiple levels that they're going to sell at, and typically you really want to know what all those are before you even take the trade, and that's part of making your trading plan. And we go back to people calling prices on this or that, or where would you buy this crypto or that crypto at, and to me, it depends on your trading plan, and everyone's different, and doesn't mean there's a right one and a wrong one. It's all personalized, even from the amount of money that we all have is different, right? So, for me, for example, if I'm looking to enter a position, it may be a 1 year out or longer play, more of like what you consider like a swing trade, a longer play thing. So, for me to enter at current levels, for example, it would be a whole completely different thing than someone that is like, okay, well, I'm probably only going to be in for a couple days or a week. You're looking at two totally different types of trading plans. And there's just a lot of work that goes into creating those trading plans, ultimately leading to whatever your goals are in any investing that you're doing. If your goal is set up to where I want to save up to pay for your child's education, and you have budgeted that's X amount of dollars. Well, you're gonna create your trading plan, and with that as your goal, and kind of set up how you're going to achieve that as part of the trading plan. Getting it further into that, you're also going to have risk management. And risk management, typically, at least from how I was taught, was you have the funds that you're willing to trade with, right? You have those set aside, and hopefully you do. It's not funds that you need to live on, right? You have to be sensible on this, and those funds that you set aside to actually do your trading, a lot of times you only want to set a certain percent aside per every trade you take. That's typically how it's done. I would say to minimize your exposure, but if you're trading all crypto, it's technically all in crypto anyways. But if I had 5% of any of my trading position and it was in FTT, well, you know what? You look what just happened. And I would have, if I had everything into it or a majority of my position into that, I'm done. I'm out of, I can't, I don't have anything to trade. Now, at the same time, you're also not gonna, have that big home run that everyone wants to hit, because theoretically speaking, in the sense that, oh, okay, well, if I put 50% of what I want to trade into this trade, then that means if it hits this, X dollar amount, I'll make X percent and you'll be that far ahead. Yes, it's possible you can do that. And there's ways to maximize your gains and trades, but that's really a more advanced thing. And but I just, again, I'm not trying to be preachy, but these are, especially right now when you see everything that's going on with, again, you go further back, there was Mount Gox, which was a major exchange that went insolvent. And even the litigation and lawsuits for that took many, many years, and no one was ever really made whole, except the lawyers, perhaps. But um, it's just so key that what you want to do in your trading, the to me. more than even knowing the technical analysis, more than, I'll show you the charts, we'll get to the juicy bits, but more than knowing all of that stuff, it's really paramount that you have your trading plan in place and you understand how important risk management is for your positions of wherever you take, and you know how to walk away at a loss if need be, and minimizing those losses. And that's really the trick of how a lot of successful traders are successful, is because they know how to minimize their losses, because your typical success rate is 60%. Maybe good times will be 70%, but I highly doubt that there's a lot of professional traders out there that average that. They may have weeks that they have those types of numbers, but the key is knowing how to minimize your risk through different tools, having your trading plan, and knowing when enough's enough to walk away. So I wanted to at least start with getting that out there, and I really think that's just super important for people to know and understand. And again, I don't want this to necessarily be a one-way conversation. So um, I think Jay said earlier that he wasn't going to be able to talk. So if anybody wants to make fun of Jace, feel free, because he won't be able to respond. But really, if anybody does have any questions and get regarding like trading plans or risk management or budgeting your trades, so to say, or any questions for that matter, as I go through with this some of the stuff, please speak up.
Hey, John, this is Kron again.
Hey,
I do have a question. Um, from your experience, what would you say would be a average slash safe percentage of your investment total, I guess you can say, to put into any one endeavor? Say, as an example, you had $1,000 that you wanted to invest. Um, how much of that would you would be a a safe starting investment for someone who's new to this? Into like as an example, the Ducks.
well, if you analyze, the amount of money that you're willing to trade with, typically 5% is what I would recommend, especially in the beginning. 5% of whatever your trading amount is in total.
Okay, great. Thank you.
Yeah, no problem. Anybody else? Okay. So there's let me see here. Da-da-da. The other thing I'll mention too before I start screen sharing here is that there's technical analysis and there's fundamental analysis. Technical being all the charts and stuff like that. Technical analysis being more, or I'm sorry, fundamental analysis being more along the lines of things that we see happening now. We wouldn't have guessed per se that I'm sure people out there are very suspect about a lot of the crypto exchanges in general. So, you could debate on that. But generally speaking, there was no way I could chart and be like, oh, yes, FTX is going to go insolvent and all the selling, and then CZ from Binance is going to come in and say they're going to prop it up and then pull the floor back out. There's no way, you can't chart for that stuff. So there's a lot of fundamental analysis that really you would want to try and balance in with your technical analysis, and it's really the balance of those two type of worlds to really give you a better edge than just per se using one technique or over another technique. And but there's things like that just happen in the space that you can't predict. And typically when I would see on charts, when I would see the market start turning for something like that has happened, that we're going through right now, you look for previous support levels within your charts, and see how the market reacts at those levels. Does those previous support levels, I would expect to see some resistance in price there, maybe a little tug of war between both buyers and sellers, but then does it still maintain there, or does it continue to break down further? And part of TA is constantly assessing the market and how those results are, and then knowing ahead of time where are your levels of support or resistance that you might expect to see price go to, and in combination with that, there's a lot of indicators and other tools that one can use with that. That said, let me open up a chart. I kind of opened up more of a plain chart here. Let me see. Bear with me a second. All right, we'll go with this one. Um, Let me know if some chart. I think you're going to have to click my live stream in order to get in to see it.
Yeah, you'll need to click on your name and select view.
Are you able to see, Ron?
Sure can.
Okay. And are you still able to see the chart now?
Yes.
Okay. I just want to make sure I can. I'm not. Bear with me because I'm not used to streaming too much, but um, this here, I'm at. If you can see my cursor, I'm looking at on the top left here. It's the Ethereum to the U.S. dollar. This is a daily chart, and again, you have different time frames in which you can view your charting. And for me, I'm more I'm more of a little bit more of a longer time frame. I'm not going to go to super short time frames, be it 5 minute, 10 minute, half hour. I will drop down to an hour, a 2 hour, a 4 hour, and I'll even go out further to a week and a month. But it's more to get a general idea of the total market. If I'll go shorter time frame if I kind of want to see where the market might be moving in the nearer time frame. If I want to see what the trend may be longer term or how we're looking in the longer term, I will obviously just go more of a longer term. But I do spend a lot of time personally with how I trade. Again, everyone's different on the 1 day chart. I'm going to just zoom in here. There's a lot of, if you want to get into like candlesticks, that's what a lot of people, there's a lot to be told in candlesticks, and there's a lot
Hey,
to
John,
know.
define
Uh,
candlestick for those of us not familiar with the phrase.
sure. So if you can see on my chart, there's for example, let me zoom in here. There's the red and green bars on here. And those are your candlesticks. And red is basically it's a down candle. And since it's down, you'll have and a typical candlestick you're going to have. I'm trying to find a good one. Okay, right here. This little guy that my cursor's next to looks like a Tootsie Roll, right? You have the candle body, and then
Right.
there's a little a wick on top and a tail on the bottom. And basically, what these are basically telling you what the market and the buyers and sellers, it tells a story, and their structure together tells a story. But basically, a green candle is an up candle, so the body is created by the open and close of a market. So since this was a green candle and it went up, that means the open was this little bottom part, and throughout, because it's a 1 day chart. So each candle is a day's length in this particular chart. But basically, throughout the period of the day,
That
this
continues to grow.
chart, yeah. So, but what you see here is this wick at the top. Um, the market had went. I'm trying to zoom in a little bit more just so people can see. The market had went a little higher than the body itself.
Okay.
You can see that.
Yep.
You can see
Yep.
that little. And so what happened was green candle. So day. The bottom is where it opened at, and by the close is where the top of the candle body is. At some point during the day, it actually went higher and came back down. It ended up being an up day. The body shows you where trading was at open and close. Alternatively, for a down day, you have basically what would have happened. It was a down day, so it opened up here and then closed down here. But during intra-trade of the day, it actually got all the way down here. So the candles are that's your candlesticks, and the you're typically looking for structure. There is I can't get really too in depth about this, but there is what
Oh no,
I
this
would
seems
have.
great.
Um, well, no, I appreciate it, but there's with TA. I mean, the courses I took again was over several years, and the typical courses I took were about 3 months long, and you would cover maybe 5, 6, 7 different things for that 3 month period, and what you put into it is what you get out of it. Although there was a lot of testing and schooling, and it was a lot of time, at least the structure of how I was taught. But you're what I'm trying to at least talk about here. You're going um, multi-hour tutorials to even get through this, but there's a lot to be learned about, like candlestick charting, and there's people that trade based on candlesticks because of what they tell you. And you can get into dojis, and like this little guy would be like considered a doji, where it looks more like a cross, or it's very thin candle body. You can get into hammers and a bunch of different names that they have for candles that typically mean a bunch of different things. But ultimately, what you are looking for is structure. And let me zoom out. And what you're usually you want higher highs. So if you're in a bull market, take this is we're looking at ETH, and this was the bull run back in started in 2017 and started it peaked in January 2018, and you have your market was trending up, and you're looking for structure, and typically I'm on a trackpad. I don't have a mouse, so bear with me on this. But you're looking for uh, higher highs and higher lows, and you can see, that's your normal structure for an uptrending bear market, and it creates a W. They're never all going to be perfect. You could see here, you can argue that this is your little W, and it took off. And typically, you get confirmation once it crosses the neckline of that W. If you can see that, once it crosses there, and that you'll see in an uptrending market. So W's are what you look for more of a bull type movement, and conversely, um, you would have M's uh, for a bearish, which would the market's going down, and you could see, here would be a very very
Good
easy,
example of an M.
simple.
Yeah.
Yeah, and you can see these shapes in the candles, and there's a ton of things to look for, but the general ideas are, you want to look for, um, obviously you want to establish the state of the market. Right now, and I'll just go down to where we are currently. Right now, obviously, we're we're not, we've been in a downtrend uh, for a little while now. We had that more recent pump. Let me just get a better picture for everybody here. But ultimately, This was December. We've been in a downtrend. You had a little W that you could see come in, and it didn't really totally materialize, but then there was a W on this side that ended up making it. So you can have W's within W's. You can have fake outs, where they make the market look like it's gonna go up, and they fake you out. But it's one little tool in the combination of things. Briefly speaking, on candlesticks, so again, there's the W's for more of an uptrend and a bullish sentiment. Again, you can see another little W here. You can see a W within that W here. But it also, you can see a giant M in here. And so, you know, any market, if I was trading more of a short term, this doesn't look like much right here. Let's say this little move. I mean, but if you go down at the bottom, you were at $2,900 and you got up to almost $400 from this little move. And there's a lot of traders that can make a lot of money just trading little moves like that. Zooming out, it doesn't look like much of a move, but there's plenty of action there for those that want to trade those types of time frames. Again, it'll come down to how much you really want to put into it and how much you want to babysit it, because for me, I do personally, I just don't want all the stress and the nonsense of it. So I'll personally look for larger cycles and determine what levels I would like to return to, where you can, nothing wrong with dollar cost averaging some buys in here, and but for me, it's like, well, I might be holding until the next cycle. It depends on your trading plan. But as far as candles go, just really briefly, again, a lot of this stuff is going to be very brief because there is so much to go into on each of these little things. But I at least wanted to, share some general basic things with people. But again, going back to where we were here, and if anybody has questions, just hop on in and say something. I really I wanted to keep this casual and open for anybody, to chime in whenever they want on things. So if nobody has,
I have additional questions, but don't worry about that. Okay, you see those two uh, perpendicular teal bars next to your white markings to the left?
yes,
What are those?
those would be. Um, so you can get pretty crazy into a lot of stuff. This is
Because
again
I
a
see
little
a
bit
lot of
more.
stuff like that on other people's charts. Where they'll be either up and down like that, or horizontal.
Um, yeah, so this basically it's really unique, and it blew my mind my first time kind of learning stuff like this. I'm just going to clean this up a little bit for you guys, but there's you can even see like the numbers that are by my cursor and stuff like that. There is just the way you can extrapolate a lot of things that happen naturally in the universe. Mathematicians have found ways to calculate those natural occurring things into a way of viewing and then displaying it on your chart. What you see here is kind of like it's what you would call an ABCD. And so basically, what I had done was I had just basically uh, marked this move, and I'll zoom in a little more for you. The move from this high at this time down to this low. And uh, I cloned it, so I made an exact copy of it and pasted it down after for this next leg down. And you can kind of see how some of these levels it pretty much matched. So if I was trading this, I can say, okay, if the market wants to continue on, I can probably expect to see a movement down into this level. And if I wanted to take that short, I would then go and have one of my targets. Again, it's one of many tools though, because I would want to have a lot of my indicators that are telling me that are like, yes, we concur with this stuff. It's not.
So,
I don't want to get too far ahead, but basically, it's the same movement repeated. So this would be like
okay.
your A B equals C D
Okay. And in
is
this
is the
example, as you would be looking at buying at the low end of that dip on the second mark, right?
well in this particular case, our market is trending down, and you can see with the yellow line is kind of like a trend line, and so I don't necessarily, you know, wouldn't have wanted to fight the downtrend. So, assuming the rest of my indicators that I would have, and there's a bunch just to show you, volume interest and MACD and Willie and stuff like that. There's different indicators that measure different things, but you really you want to have, as far as how I work, is you want to have at least three reasons to take a trade. I'm not going to go off of one thing because most times that's going to really steer you wrong. So you have to really know a lot of the tools and be able to put them together. And if they're all giving you the thumbs up, then you're now, as a trader, you're giving yourself that edge to have a more successful trade.
Okay.
So I don't, you never really want to fight the trend. So again, as you can see, like this trend was down. We already, again, 2017, we already hit our top. And, again, if I really want to zoom in on this, you could see how big these moves really are. And so we're coming down the other side. This is a trend line, and it's basically you can find different levels of support and resistance, and a lot of times it'll obey it until it doesn't, and when it doesn't, it goes from, as you can see in here as an example. I just have this yellow trend line. We had the peak again. This is 2018. It bounced off. Let's see. This was January. Late, almost a month later, again, it treated it, it respected it, and it bounced off. Again, these are each candle is a day, is this daily chart, and it had more actions. It followed my A, B, C, D, and then it started kind of leveling out. You could see a real sloppy M here. You see that? And it really confirms once it breaks the neckline, and you want to have a closed candle body. It can't be a tail, or a wick if it was moving up. You really want the candle body closed for the day to confirm it. And then again, it really wanted to test it again, and it just got rejected, and it kept rolling down. And again, we finally, now we're in late March, so we're even a couple months further down the road, and the market kind of started leveling out, and you see the letter of the alphabet here. You can see a W starting to form, and it broke through, and it closed. The candle body closes in there, and it confirmed the W, and the W was bullish, and it continued to go up. Out of curiosity, I just want to see, since everyone's here. Let's see. Yeah, let's go with this. I'm just curious to see where these line up. It would have been that move. Yeah. Um, yeah. So you basically started making another run. So it broke through this resistance. This resistance um, is no more at this point, and it had a nice W bullish figure. It broke through that resistance. It could have W'd and bounced off. A lot of times, what you'll see is once it breaks that resistance, it then becomes support. So what you'll see is
And at that point, you
you'll
could
see.
actually start a upwards trend line, right?
Well, a lot of times what'll end up happening is, let me get to my draw here. Um, it wouldn't be uncommon to see it. It'll just kind of roll down this yellow line. It was resistance. Well, it was resistance going all the way up here
Right.
for many months, and a lot of times your trend lines and even levels, candlestick levels. I'll get to that later. They become what was resistance becomes support. And so a lot of times they'll kind of roll along this side of the trend line, and then and it could last a while, and then you'll start getting your bullish movements. There's your W, and then it confirms at the neckline, and we're off to the races. And that's it doesn't always go that way, but this, as you can see, was very much resistance for many months on a daily chart from that peak in 2017. And let me, and you can see it. And then we went sideways for a long time. You'd had another candle. You consider this a head and shoulders.
Yep.
You could see the left shoulder, the head, and the right shoulder. And once it breaks the neckline, we're down. And a lot of times, what you'll actually end up seeing is if you take, let me turn my magnet on. Let's just take from the top here, and we'll go to the break of the neckline around the left shoulder there. And then I'll clone this. So that's an exact clone. I'll grab it. No, too much stuff on here. Actually, there's not a lot, but all right. And I'll try and see. A lot of times I'm a little high on there. It's not even, but down to this level. And, it definitely bounced around close to there. And then we got another M and it broke down even further. But, even if I wanted to take another short trade and after I took this up trade and want to do a little short, I can say, well, once we confirm this head and shoulders, okay, well, let me go from this was 618 and let me set some targets at around 363. I mean, it's a big move, and it took a little while, right? Once we confirmed, it would have been here, let's say, and that was May 25th, and it wasn't until June, July, August, almost 2.5 months. So there's again, I
Okay,
don't.
that makes sense.
There's so much to throw out there that I can I don't want to overwhelm people and give too
No,
much stuff.
you're doing great with the layman explanation so far. So no worries there.
Okay. I mean, does anybody have any questions so far at this point?
Come on, folks, speak up.
I've got
So,
one.
oh boy.
How do you determine, I guess, your viewing timeframes?
It
But not
comes
only,
down.
not just like periods of time, like from September to September, um, but also the candlesticks and those timeframes.
It depends on uh, how you're trading. It depends what your trading plan is really, because if I'm going to if I'm a day trader, let's say, okay, I might zoom out to a 1 day chart to double check the trend. I am a day trader is not really a day a 1 day chart. They're depending on what they're trading, depending on their software and stuff like that, they could be looking at 15-minute candles, which it gets it gets crazy when you're looking at 15-minute candles. They're looking at um, shorter time frames, and so like here, this is let's just say this was Monday, October 31st. Um, and even at 15 minutes, let's see, it goes back even further. And you're going to see a lot of these same candlestick patterns in a smaller time frame. I mean, look at this end. But anyways, uh, okay, so let's just say from like there and roughly. I mean, on a 15-minute chart, there's all 15-minute candles. I mean, that's a day's worth of trading there. Um, and a lot of times day traders they might look at the whole previous day's trading range, and let's just say that trading range was, um, let me go. It had a here. I got to take the magnet off. That's all crooked, but it had a high up here, and then the low was down here for the previous day's trading range. So they might be like, okay, well, this was yesterday's range. So if we're planning on staying in there, if we're at the lower end of range, I might put an order in and sell at the top end of range. And you can even look here. It pretty much covered that same bottom end and top end of the range, and then it completely emmed out like crazy, and it dumped out, and this looks like a huge move, which to a day trader it really is. That was 1614, and it went to what, like $65 right there. And if people are trading leverage and stuff like that, which really in the beginning I really do not recommend that. That's why I really stressed at the beginning the importance of trading plans, knowing what your trading plans are, and risk management. And Kron, like what you had asked about trading size, 5%. I mean, again, with what's going on with people with FTX and other exchanges, Mt. Gox, that happened in the past, there is just it's a risky space. I mean, we all know it, but that's why it's a great opportunity at the same time. But you really have to manage your finances. So if something like this happens, you're not out. You're not out of the game. It's like, okay, I'll live to fight another day. But sorry, I digress. But yeah, Zint, it's if you're doing more of a trading thing, you're going to lower your time frame down. Um, there's software out there. This is TradingView. TradingView has a free version that anybody can download to use and mess around with and get used to accessing some of the the tools. But you're not going to be able to get all the fancy bells and whistles because, of course, they charge you for that. And so, if you want to add a bunch of indicators on there, you won't really be able to max out past three, I think, is what it is, unless they changed it. But yeah, there's other software applications out there where people actually have it. The day traders, the real day traders, will have it tied into their trading account, and they can literally just like click a button and be like, okay, I'm going long here, and it automatically places the order. They can click a button and be like, okay, I'm going to sell here, and then click another and like, okay, I have a stop set up here. It literally is tied into their bank account, and all it takes is a click for them to do all of that. So it's nuts, how crazy they can get with it. But um, yeah, for shorter time frames, trading, you're going to really want to adjust your what your charts are looking at, but you usually go a few time frames, above and below, and maybe even further out, just to get an overall look at what your trend is of the market state itself. Hopefully that kind of answers. So let's zoom
Got
back
another
out.
one for you.
Okay.
Um, so like the volume What are you looking
Hmm.
at there, and how does that play in?
Uh, what they say is volume speaks volumes. And obviously you have a lot of volume here. Uh, I have, on one of my indicators for volume, um, you can even use the same W and M type formula, but volume really is gonna tell you a lot of things, and volume is gonna determine who's driving the bus. Is it the bears that are selling in red, or is it the bulls that are buying up in green? And when you're looking for, volume is one of your indicators, and it's a very very important one. Um, but basically, it's going to let you know how much action is going on in the market that you're deciding to trade in. So, you can have divergences, which a lot of indicators, what you'll want to look for is a divergence, um, where, as example, now granted, this isn't a volume one. This is what you would consider MACD, which is divergence. But basically, it's a moving averages and how they intersect. And sometimes, these will set off before the action happens. For example, the it was showing it going down a little bit back in July of 2018, and it confirmed on this one. And the market was still actually going up into it at that time. And it wasn't, and usually it's like a foretelling type of indicator, but look what the market did after that. It doesn't mean I would go solely on this. I would then, how is volume looking? Where are my candle structure? Well, how is that looking? Um, there's a bunch of tools, and a ton I haven't even shared yet, that would basically, help determine um, collaboratively. Because again, I usually say you want to have at least three reasons to take any trade. And typically, when you can find three reasons, you could typically find more. But you don't really want to go off of just one thing. But volume is very very important in helping determine. Um, it lets how much action is really happening. For example, weekends in Bitcoin. You have a lot of institutions that now have legitimate funds to trade ETF in the market. But those places are still only open Monday through Friday. But Bitcoin is a 24/7 market, so a lot of times you will see. I don't really personally trust weekend trading for crypto because there's a lot of manipulation that could take place there, and you'll see lower volume, but because there's lower volume, the price can be a lot more dramatic um, going through those weekends.
Mic off.
There's a bunch of little things, and again, I apologize if I'm throwing too much at people, but there's just so much to go into with all of this, and having an hour, 2 hour conversation is not going to justify
Mic on.
any of this. And I'm just going to scoot a little bit forward to now.
Just as an
And
FYI, we're at 50 minutes.
okay, thanks. Anybody still have any questions they want to ask? Anything? All right, I'll keep going then. So yeah, so trend lines is kind of more, and I touched a little bit on it earlier, but you can have trend lines for upward trending markets and downward trending. But basically, I want to try and get a better display for everybody. What I had showed earlier, how support and resistance works. And you take this was back in May 21, the first little run up on ETH. And we had the pull back down. We had another run up in September. So, May, June, July, August, September, what, four or so months. And I mean, and look how well it observed it. And it's just kind of amazing to see it. There was your high. The market bounced right off of it. But what you'll see is this was resistance, right? And eventually it broke through. And you can see it was bouncing off it, bouncing off it. Finally, it broke through. Once it broke through, it started testing it as support. And to me, that validates that trend line as significant. We topped out, and even on the way back down, it was starting to bounce off of it. Decided to add another trend line, and it kind of squeezed in there. But it finally broke through this one, and eventually later, all the way back in April, it actually started flirting around with it again. But as we had headed down, I decided to do one for us heading down, and it was several times, 1, 2, 3, 4, and then we finally got a little bit of a better bullish pattern, came back up to retest it, and we started. It was a lot of support as resistance, and it was struggling with that back and forth. Before it finally started closing some good days above, it tested it, and we see another W. There's your W. And it crossed the neckline, and off we were. And I actually ran. So I guess it's hard to go forward. And again, I apologize. And I'm rusty with this stuff too. Ducks got me too busy, so bear with me on that too. But I ran what's basically called a Fibonacci, and there's basically repeating sets of numbers that happen you in naturally in Earth. The swirls on a snail shell, on a pine cone, the patterns that swirl. It's on many plants and a bunch of stuff. And basically, you take all those numbers, you can come up with what's called the Fibonacci sequence, and you extrapolate it on a chart. And there's a lot of reoccurring numbers that happen a lot. And 1.68 is one of those numbers. And so I just ran a little bit of a fib on this impulse move when it finally busted through, and then it actually proved as true as support. When my W came across here, my target for a portion of my sell would have been the 1.618 target. And lo and behold, that's right where it tagged. And that would have been my exit, and I'm out. Fibonacci's work up and down. I guess there's just too much to get into with that. And I just at least want you to know that there are tools out there that can help you project, other than just doing like an A, B, C, D bars that Kron had asked about earlier. There's a ton of tools out there, and a lot of them you really want to use together. For this, I would have had a couple reasons, right? I have the W in structure confirmed. That was one. The fact that it broke my trend line is another. I'm pretty sure. Okay, at this time I would have had a MACD bull divergence. That would have been another. There's just, and you can even see in some of these, this is relative strength index, but you can even see those W's forming in other indicators, and you can use those same M's and W's in other indicators to help you decide, what's to help you, give you your 3 reasons at least to take your. So what else can we look at? So, okay, ETH right now, not looking too hot, right? We have all that crap going on with FTX. We have finally got a little bit of a green candle starting here, at least on the daily. But what do we, what do we decide? What do we think of this? It depends on your trading plan, right? For people that wanted to, um, it's like you're catching a falling knife, right? I know it's cliche, and some people might be up to the challenge, and some people are. But if I was to throw a knife at you, would you catch it in midair, or would you wait for it to land and pick it up as a safer option? And a lot of people would opt for the safer option to wait for it to land and pick it up. Um, and that being the case, so what am I waiting for? Well, I don't really want to personally. This is just me. I mean, these are great possible chances for dollar cost averaging. Where you buy a little bit here and buy a little bit there. Everybody's trading plan's different. Me personally, I am. I do want to see a little bit of structure in the candlesticks here. Um, maybe if it starts going kind of more sideways like this for a couple days, that doesn't mean I'm in the safe by any means, but I personally would feel a little bit more comfortable there. What else am I looking at? Well, I can add some. Let's add some raise here to previous levels, right? That ETH was at. And typically, tails on the candlestick bodies, they like to be revisited if they're open and there's no candle body later to fill in that tail. They like to be revisited later. And so what I can do is I can put a bunch of rays on here marked by the green line in a bunch of areas that might be important levels that ETH needs to come back to revisit. You can already see these first two right here. We're not there yet. Um, that's going back to mid-June. Let's just make this a little smaller so we can add a couple more of these guys. We know we're all the way down to levels. Is there anything crazy back over here? This is the start of our bull run. So we're going back into January. I see a little tail right in here. I can probably add. You can argue how many to add and stuff like that. But what will it end up doing? It'll end up giving you a potential range where you can see the candles haven't come back, and we're only just now. Okay, so some of those marks we kind of filled those bodies in with those candle bodies back in June. So that was June. So how many months did we have to wait for that to happen? January of 21. Some of this stuff takes time and patience, but it depends on your trading plan and what you want to do. I have other levels that I would probably want to see down in here, um, possibly down in here. And these are levels where the market turned. Do you think it was you and me with our little bit of ETH that was making this market turn? Or do you think it was the institutional money that has a lot of these funds that is making these market impacts? And the answer really is the institutional players. The institutional players are the ones the big banks, the big money, the whales, the real whales. They'll put these pivots in the market. Retail investors, your average investor, while this ETH is going up, and um, they unfortunately they're the ones that tops, and that's right when the whales are like, okay, like somebody right here, somebody bought this at 43.52. Like it sucks to be them, and somebody did it, and you think, what were their feelings at the time? You think they're feeling, look at all these green bars. I mean, ETH is going to the moon. It's going up for forever, and then the big banks come in and the big players, and they're like, no, we're going to stop it here. So these big pivots, even this level is going to be important at some point because that's where they decided to stop it. Kind of more a little bit in this area where you have a few candles, a few days worth of action. Those that's telltale signs. Even down here, they decide, okay, we're going to stop here. These are important figures, and if I add some marks on here, what happened later on when these came in? Let's see. It busted through. That was right when we had, but look, it's honoring it. It even tested it a few times, here and here. I mean, you're right in the ballpark. You're, what, if $50 off a $1,300 asset? I mean, they came back and kind of pivoted off there again. And then look at all this. Look how it obeyed it. All these daily candles are just having tug of war there. We had this little W in here and to an M to where we are now. So, you can see whether it's the horizontal support and resistance, the longer yellow trend lines. Sorry, I'm not zoomed out, guys. Or finding those little pivot points in the market. Like these ones down here. There's a couple tails down here. So for me, it'd be interesting to see. I mean, they might mess with us and see what they turn around. We've gone down a lot for several days, but now you're hearing concerns about FTX had a lot of USDT tether. Is that going to hit the market? And now you're hearing about Solana and a ton of Solana that's going to be unlocking soon. Are those people that are unlocking it, if they're going to be able to sell it, are they going to sell it for ETH? If they do, you might get a little bit of buying pressure here. Are they going to sell it into USD? Well, maybe they feel concerned about what happened with FTX. So, who's to say what's going to happen? We've definitely gone down a little ways. So, maybe, who knows? But I have lower levels marked that, I might be interested in putting some little nibbles in. Again, nothing crazy because, if just a couple days ago when we saw this big green or this big red candle going down, everything, right? A rising tide all ships. Well, it also does the same in reverse. So, all your altcoins and everything were going down. And then, it's like, oh, this is the dip. We're retesting these levels. I'm going to go heavy. Well, you just bought the dip, but you didn't buy the dip of the dip. And who's to say there's not going to be the dip of the dip of the dip? So, that's why, spacing out how you buy. It's the thing is from one thing I've learned, and I know we all can relate, is that you're never going to necessarily buy the perfect, sell the perfect top, buy the perfect bottom. You can cost average, you can get yourself in that area, and you can't beat yourself up over those things. You take your trades, you plan your trade and you trade your plan. And, it's a matter of sticking to what you set forth for yourself. And, some were good at, we did a good trade on, some we didn't. But, I think a lot of times, even if we did a good trade, it's like, well, oh, if I held on for this, I could have had this much more. Well, yeah, it's, there's a lot of psychology behind it and how we beat ourselves up, and we need to be aware of that. Yeah, but you know what? You made a successful trade. You know what? And there's always going to be something else. Always going to be another opportunity, and you focus on that and move on. So, these are some of the things I'm looking at. There's longer term cycles that could be brought into question, that one can get into as well. I mean, here, look at this. This is zoomed pretty far out, still on a day. Back in 2017, you had this monster move. It doesn't look monster on here when you compare it to what happened just now. But what about all this time? What about all this? What was everyone thinking? What was everyone doing? I mean, maybe you weren't in this, which is understandable, but there was a lot of people that were in the space for this, and this when this happens, all this downward trend, and all this nothingness. I mean, how long was this? This is August of 2018, and there's all just sideways action. August 2018 to July 2020, almost 2 years. And yeah, there's overall, I mean, what is this? 80, $70 here, up here. It went to 370. That's some good movement. But overall, at the grand scheme of things, it's nothing. But when people should have been like dollar cost averaging through this period and had the patience, and some people were, and had the patience to wait for this. And if you believe in crypto, if you believe in these things, I still feel personally that we're kind of on the other side of it. And it doesn't mean all cycles will be the same, but I'm still waiting to kind of see this here. Do we have to? It's happened before, and it happened even further if you want to look at Bitcoin, because it doesn't go back as far. But we haven't had this little lull period, and it doesn't mean I'm right, and there's still these lower levels that I mark that I would still anticipate maybe we test, and maybe at some point we retest this trend line, and and this was going further back. You could probably even do a different trend line, but the point is that we may have some time yet where we're gonna perhaps tumble lower, perhaps do this way trading for a while. If I really zoom out, it's really doesn't look like much, but when I zoom in, there's still a lot of volatility in there. If you're zooming in, as going to Zeet's question earlier, if you're wanting to do more thing, I mean, is there a possibility for you to make money here? I mean, when I was flat line, this is $85. I mean, this went up to 277. It peaked out at 364. You could see the W's even in the smaller time frames. Even right here, there's a little W, right? I mean, it's all part of bigger pictures, but that's where you get into fractals. But there's it depends on what kind of picture you want to look at, and perspective. So, for people, I would just say, manage your risk. If you want a dollar cost average into this, I personally don't see anything wrong with that as long as your trading plan allows for it. As long as you leave some reserves in case we get down to some of these lower levels. Just because I marked them doesn't mean they're going to happen. But they're levels that I showed you for other reasons where the market pivoted, the other tails that were out there. So, and as I showed you, some of the previous one were handled quite amazingly. So it's just something to keep in perspective. Another interesting thing I'll show you, and I might have to, unless people have questions, I might have to kind of end it here. My throat's getting a little rough, but what I found was interesting with these Fibonacci levels. That's really something for its own conversation, but I was just running off of this again, going back to 2017, and these Fibonacci levels can be kind of done exponentially to where you escalate them to higher levels. But I just went off of this little push in volume right here. It was several days, but on the chart it was where ETH had its first little impetus of movement on its bull run back in 2018, and I measured that, and I did a measurement off of like the first big move, and that's where you see these numbers. This further back one representing this first move. These set of numbers, they're the same set of numbers that different measurements because they're measured off of different moves, are up here. And if I went off of this initial move back in 2017, 4.669 is considered one of the chaos levels. And look at, and that was based off of the move. At that time, it would have been Friday, November 24th. And if the trajectory stayed in a bowl, which it did, one of my levels was this pinkish line all the way to January. Lo and behold, that's where ETH topped out for that year, for that cycle. I'm sorry, not that year, that cycle. So it was pretty interesting to see. And even if you look at the 2.618, this next move, it bounced right off of it, and then continued on further. If I was doing the smaller play, my 1.618, that magenta line, there was a lot of action right there. It busted through and then it tested as support. It even came back and busted through and then acted again and gave you another chance to get in a couple times there before taking off for its final move back then. Interesting thing though, so all of these two sets of fibs are run off of 2017, correct? And they go up. You can go up to like 16.8. You can even go higher, but without getting too far out of control here. You look at this 4100 to 4500 were based off of 2017 as different possible levels, and it was really these two lines where my cursor is. And if I go all the way back to where we are for this last run, you had those two, and look at, zoom in better for you guys, sorry. It was those two levels, the first two run, it completely obeyed it back then. Again, I have higher levels. That was the highest one, still going all the way back from 2017. But you have these levels right there, and look at, those were your ETH tops for 2021. So I found it pretty interesting. Look at how it, off of a fib I took from 2017 cycle. And that was your top. And look at all those daily candles just bouncing and testing and bouncing and testing. There's still one more off of that. That's this one. Does that mean our next cycle, maybe we look at 8,300? I don't know. I don't have a crystal ball. And any TA person that's calling numbers, they're full of shit. And they're trying to sell you something. But I found it interesting. There's a lot of congruency in how that worked. So, time will tell, right? Time will tell if we come back to those numbers. We'll tell and see if we retest these lower numbers that maybe I might do a little bit of, putting a few bids in on. And there's definitely some levels low that we could test. And it's at the same time, that's as far as TA. I mean, if the fundamental side throws you a wrench, and then all of a sudden tomorrow they're like, Europe, you and U.S. decided that they're banning all of Bitcoin, or if China decides for the 15,000th time that they want to be like, oh yeah, we're banning Bitcoin, well, we're probably going to see another leg lower. I don't know, maybe these levels might be even more realistic. So, there's a lot that goes into this, and it really doesn't give anybody the service of, it's a disservice, with the amount of time to try and go through a lot of this stuff. It's and for that I apologize, but there's a lot to go through, and hopefully there's some takeaways that people have from it. Hopefully it was helpful. Again, I'm in the chat, so if there's any questions, you can always hit me up. You can always DM me.
Absolutely, John.
And I can
Very
give
much
you.
appreciate all your input on this.
Yeah, no, you're very welcome. And sorry to keep those up. That they had to stay up. It's just. But yeah, if there's ever any questions or anything like that, I would be more than happy to help out any way I can. And someone said, so confirmed, 8,300. Yeah, again, it's just, we'll see. But you know what? If I had to guess and pull out my crystal ball and rub it 18 times, I would say maybe that might be interesting to see on the next cycle. When is that next cycle? I mean, you can get into, I didn't even get, but if you want to talk about Bitcoin, I'll throw this nugget out there at you. And if you want a little bit of homework, there won't be much homework. Bitcoin halvening, when they do the Bitcoin halvening. And they typically, it's every 4 years. And if you want to look at the chart history, maybe pull up Bitcoin and see what happens on the halvening event. But more importantly, see what happens the year before the halvening event. And what you'll find is typically is you'll that's where you find the lull in the market is kind of around the year before. This case would be 2023, and as it being a good entry for the following year, it's a longer term play. You want to look for value in your purchases, but maybe 2024, 2025, who knows? It doesn't mean all the cycles have to be the same, right? There's no law to that, but I can only go with what exists and what's there now. And you constantly reassess and readjust to what's happening, whether it's, technically on the charts and fundamentally in the news. But I guess that's what I'll say about that. Unless anyone has any other questions or anything. My throat's shot.
You did wonderful, John. Very much appreciate it.
Thank you. I appreciate it.
I'll go ahead and stop the recording at this point. Thanks again.
Sounds good. Yeah, thank you. And thanks, everybody. Appreciate you taking the time.